Welcome back to another episode of converting strategy logic into a strategy. So today, I want to convert this indicator into a strategy and I want to backtest it. Now I got this in an email through TradingView. It was featured as one of Pinecoder's featured scripts and it was made by IO72 Signals. It is an adaptive Hull moving average. And here they have the chart showing the indicator. Note that these arrows are not part of the indicator. These are placed by IO72 Signals himself. And the RSI is a separate indicator, as well as this dominant cycle. The adaptive HMA is the indicator that we're looking at. These are just helpful in describing how this indicator is working. So basically, this indicator is a Hull moving average with a dynamic length. And the length it's always moving based on either the volume of the underlying instrument or the volatility. In this script, you can change and select which one you would like for the HMA length to adapt to. And that's pretty much the secret sauce to this indicator. So here he kind of explains it a little bit and he shows you how to use it. He's drawing the HMA line yellow when the market is flat in consolidation and it's showing relatively small movements. And then, it kind of describes what that indicates, what that might indicate. And the light green colors or light red colors tell if a trend is forming, but still relatively weak. Because he's also using volume or the volatility to predict if the trend is there or not. And then the darker green or the darker red is what we're looking for. And he says this is where we can expect some good and strong price movement to ride. And he says if it's strong enough many times it marks a start of a new long-lasting major trend. This is cool. This is something that interested me and I want to show you guys and I want to actually convert it and see if it works. So in the settings there's an input, this thing called a charger. This is the selection of the volume and the volatility, or the volatility. So you can select which one the HMA will be adapted to. And then you have a minimum period and a maximum period. So these are the range of the length that your HMA, your moving average, will be adapted to for the maximums. And then within that will be the dynamic length. And I'll show you how that works in the code. And then there's this consolidation area threshold he uses that has to do with the slope calculation. This is how he's calculating if the trend is consolidating, if it's trending up, or if it's trending down. He's using a slope formula. And then he has a background coloring. We can select to turn that on and off. He set up 2 alerts in this script that aren't really related to the script too much. One's just for when the volume is breaking up above average, and the volatility. I say they don't really relate to the script because they're not set up in relation to the HMA. They're set up in relation to his calculations on volatility and volume. So they don't do much for us. And then he gives this is what interested me here. He gives the usage of it. Very, very nice buy entry to catch big movement if price is above MA, HMA's color is darker green, and RSI is above 50. And this is what we'll be coding in the strategy. And then the sell entry is just the opposite of that. So he doesn't actually have this logic coded in the indicator. He just says this is how he uses it. So I want to take this logic, I want to put it into a strategy, and I want to backtest it. I want to see how useful this strategy, this indicator is. I want to verify on some real data. So he has some notes here. Lower time frame, of course, means more noise. True. Depends on the instrument. You might need to tweak the settings a bit till it conforms nicely and shows lots of good trades in history. So he's got it in the British pound 5-minute time frame here. And he's kind of showing how the RSI, when it's below 50, but you have a green line, it's still trending down. And then he goes on to show some exit take profit points that we can use using the RSI or a static HMA, like a faster HMA, maybe a crossover. He doesn't really go into the example there. So maybe we'll build the RSI if we can find the time. And the RSI looks like just a cross under some upper threshold. So we go along here, this green arrow, according to his long entry, and then here we look like we exit at this RSI cross under threshold. And then some more stuff here, some more stuff. Okay, so this is the script. I've added it to my favorites so I can access it. I'll do that in a second here. And basically here's the inputs, and here's how he is calculating the volatility. He's using the ATR, and when the ATR 13 bars back is greater than the ATR of 40, it's very high. It's highly volatile. So it's he's kind of looking at like an average ATR and looking at when there's a spike, when there's a transient in the average true range, which will basically be when the price is spiking beyond its normal range. And then he has the RSI volume, so he's using the volume as an input here. Normally you would use the close of the prices. He's using the volume. He's using the 14 bar length here to calculate this RSI volume, and then he's inputting that into the source for the HMA. And then he's using that oscillator and checking if it's greater than this 49 value. And that's called volume break. And basically his dynamic length comes down here. He's initializing a variable called dynamic length, and he's taking the average of your inputs, minimum and maximum length. And he's just selected 172 and 233 as a default. And I believe he made a note up here that normally you would want to use a 200 HMA. So yeah, he found, I don't know where it is, it's somewhere up there, but he found that the average between those is probably around 200, and that kind of makes the good HMA for him. And then when the dynamic part comes in down here, you select this charger thing. He's called it charger, either volume or volatility. And if you select volume, it gives you the RSI HMA volume, or if you select high volatility, it will give you the ATR calculation he's done here. The volatility meter is how he refers to it. When that is true, so if we have a high volume according to this, or say we select volume for our charger and we have a high volume, the oscillator is greater than 49, then this if statement will be true, which will mean that we have a comma here, which will mean that this statement here gets executed and set into the dynamic length. And it's just taking the max of either of these values. So we have the minimum length, which is 172, and then this dynamic length calculation here, which is going to be the average that we set up here. So it's probably going to be around 200 times 1 minus this adaptive percentage. You know, I don't know where people come up with this, but this is 3.141. So he's using the pi divided by 100. So he's got this percentage of pi here minus that, which is giving us around 97. So 200 times 0.97, and he just takes the max of either 172 or 197. I'm not sure how that, maybe that changes here. Maybe I'm missing something. But he's taking the max of either one of those values, and it's being returned into dynamic length. So this calculation is what it is. And then the other one, if it's not true, we're taking the min of the max length, and then this times dynamic length times the adaptive percentage. So it's going to be whatever max length is smaller, or whatever max length, min length, is larger. In very simple terms, he's just adapting the length of the HMA. Here, let's look at dynamic length. He's using it down here. So he's calling his HMA, and he's using this dynamic length to adapt to the price movements based on, in this case, volume. So when the volume is very high, he'll have a shorter HMA length, a shorter moving average, so it adapts quicker. When the volume is very low, the moving average length will be longer, so it moves more steady. Because when the price is moving quick, you want a moving average that's moving with it very quickly. Otherwise, you won't be able to, there'll be a lot of lag in your entries and exits, in your signals. And that's what he's trying to do here with this calculation. Is it right? Is it wrong? I don't know. I would have to look into these calculations more in depth. But that's what he's doing, and that's how he's doing it. And then down here, he's calculating the slope so he can show if the market is trending in consolidation or choppy. And he's got a formula for all that. And down here, he has this consolidation area threshold, which basically is looking back past 9 bars for here, and it's going to look at those 9 bars, and that's kind of how you can tell if it uses the slope, and that's how you can tell if it's trending or consolidating. Because the further you look back in a market, the cycle kind of changes. So for example, if you're looking back 9 bars here, I would say it's consolidating. But if you look back, however many bars that is from here to here, I would say that's trending down. So that's the consolidation window. If you're looking back short, that would be consolidating, referred to as consolidating. But if you're looking back further, then we're trending, and even further, we're still trending down. And then if I zoomed out, and I think you get the point. So that is what that is for. And here's how he's calculating his HMA. He's using his own. I'm not sure if there's a built-in HMA calculation. Maybe there's not. But he's got his HMA calculation here with the dynamic length. He's plotting it. And this is just background coloring. And he's got the alert set up for the high volatility and the volume. Okay. So that's the introduction to this script. Let's go ahead and turn it into a strategy. So here he's on the Euro USD 15. I am on the Euro USD 15 minute. And I favorited it so I can find it in here. 72S adaptive Hull moving average. I'm going to add that to my chart. And now I have it here. And you'll notice there are no arrows like he has here. So let's turn this into a strategy. First things first, I need to get the code. Now it's locked, so I need to make a copy. I'll go over here to more, make a copy, and save it. Now this is in my scripts. Now let's grab the trading logic usage. Copy this, bring it over here, and we'll put our trading logic down here. We'll paste that, make sure this is a comment, and we're good. All right. So our buy signal, our buy entry, price is above MA. So let's go name an identifier called buy entry and give that equal to close is greater than MA. No, not MA, but the dynamic HMA is what we want. I'm getting too literal here. It is best when price is also not too far distance from the MA. Or you can also use distance oscillator to help out too. I imagine what he means there is, if you get a signal here, but look how far the price is, quite far away. So you probably want to get a long entry when you got the green, like for example here, and the price is still close. But for now, let's just get the basics set up. So close, price is greater than the dynamic HMA. The second one is HMA's color is in the darker green, which means it's charging. Okay, so, and let's just make sure we separate this logic, some parentheses. So this is the second condition. So we need the HMA's color is in darker green. So when it's like this. Now here, he's plotting the dynamic color with this function. And he's passing it the dynamic HMA and a set of 5 colors. So I don't know what these are off the top of my head. So let's bring it into this color hex program online and just paste them in here. So that looks like a green. And this one is a lighter green. So this one right here is the darker green. And we need to make sure that the HMA color is in the darker green. So okay, so we'll copy this. Actually, we'll copy this whole thing. All right, paste it here, and then we'll set that equal to this color. Because what this function here is doing is it's passing in the dynamic HMA and all these colors into this function. It's calculating the slope, and then based on the slope, if it's greater than flat and we have high volatility or high volume, then return color 1A, and color 1A is the darker green. But it doesn't matter what color 1A is or color 1B here. All we care about is being above the darker green. And we know this one's darker green, so we know this function is returning a color. So if we call this function with everything that's in here already, don't change anything, and check if it's equal to that color, then we will be able to check if we're above this green bar. Or if not above, but we'll be able to check if the HMA is green. This close right here is greater than dynamic HMA, checks if we're above it. This just checks if it's green. Okay? So close that off. And the last one is the RSI is above 50. So we can do and we do an RSI here, and we'll just do a default RSI with a close and a 14 length greater than 50. And that should be it. So what we can do is we can plot this. We're still in a study, so let's just plot it and verify our signal is correct. So plot by entry, and this is going to be a Boolean. It's going to return a Boolean. So actually, let's plot an arrow, and we still can't use Booleans for plot arrow, but we can convert this to a 1 if it's true and a 0 if it's false. So we're looking for a 1. We'll plot a green arrow. So that's saved, or saving, processing. Alright, I need to add this to the chart, and I'll get rid of the other one that we copied from. And if you look, we have a lot of green arrows. But let's add the RSI in here, and now we can see, is there a 50 line? Well, at least here we can see that we're above 50. It's pretty evident. You know, we're way over it. The line is green and the price is above the line. And now we're getting the entry signals. So that's his logic, but obviously we want to enter here. So we could change this a little bit. So we just enter on this first green arrow, the first one we get. So we'd enter here, we'd enter here, and we'd enter here. So we just need to make sure, like, we're looking for a change from here to here. We don't want to enter after we've already entered. So to do that, there's a couple ways we can do this. And I'm just going to do this. I'm going to add in crossover. Let me move myself. Getting in the way over here. So crossover takes two arguments, an X and a Y argument, and it's looking to see if the X argument is greater than the Y argument after the X argument was less than the Y. So you got to cross. The X is crossing over the Y. So I've got a lot of parentheses here. So this is going to be the Y argument, 0. And right now it's checking if true is crossing over 0. That won't work. So I actually need to convert this Boolean to the 1 and the 0 like we did down here. So if it's true, it'll be 1. And if it's false, it'll be 0. And that'll be our X argument. So it'll be 1 or 0. And then we're going to see if it crosses over the 0. Let's make sure that this is all good. Let's try and save that. And we got a little input error. I probably missed a parenthesis here. That's what it looks like. I think I need an extra parenthesis to close this all off. So I close off this entire thing. greater than 50. There we go. Had one extra parenthesis in the wrong spot. Okay. So now we're getting one entry signal when we get the crossover from go long from nothing. So go long here, go long here, and go long here. That looks pretty good. That looks halfway decent. You know, we're going long. Like you said, we want to make something here so we're not so far away from the moving average. But even then, you still made some money. But then it came down. Then we go long again here, went up a little bit, came down, and long here. So that's looking good. Here, that looks good. That looks good. This, not so much. But then we immediately get a crossover here to our sell signal. So let's add in our sell logic. We can just copy this, and this should be fun. So sell entry will be when the opposite. So when the close is less than the dynamic HMA, and the dynamic color is not going to equal that, but it's going to equal dark red. So let's see what dark red is. Nope. Maybe this one. Okay, so EB4D5C. Copy that there. So when the color is dark red, and when the RSI is less than 50. And that's it. And we can keep this the same. So our sell entry will be true. When it's true, it'll be a 1. When it's false, it'll be a 0. And when we get a crossover, we'll get the sell entry. So that will only plot once. And to make these arrows look nice, we can put a -1 here. Because the plot arrow function, if you have a positive value, it'll plot a green arrow. And negative value, it will plot a red arrow going down. There we go. Let's verify. We are dark red. The RSI is definitely under 50. And the close is below the HMA. Same thing here. And the same thing here. Awesome. Cool. Now let's make this a strategy. So first things first, change the study to strategy. This is all good. Keep that the same. And all we need to do here is just do strategy dot entry. Put in an ID, which I'm going to name go long. Strategy dot long. When equal to by entry. And crossover returns a series bool. So when we have a 1 here, when this is true, we're doing a lot here. We're going to get this, it'll be turned to 1 or 0. Well, it'll be a 1 in case if it's true. And then the crossover is going to look at it and see that the 1 has crossed over 0. And that will also return a true. So it's going from true to an integer, or it's going from a bool to an integer, back to a bool, into this by entry. So by entry is still a bool. So we can use when true, when equals true, we go long. And we can do the same thing for the short. Sell entry here, change this to short, and change the ID to go short. Save that. And because these are entry functions, they're just going to reverse position every time we have an opposite position. Now let's look. Let's get rid of this RSI. So we're still plotting the green arrows, which is nice. It helps us verify our signals. So this is a signal we're getting, and because we're using the entry function as it is, it sends a market order which doesn't get opened until the next candle on the open, and here we go long. And since the entry function is controlled by the pyramiding setting, and pyramiding is by default set to 1, well, we're not getting entries here. But if we move this, we'll get an entry here. There we go. And we do 2, 3, we'll get another one here. Cool. And then as soon as a short signal comes along, it reverses our entire position and then goes short one position more, one more contract. And we have that here. Very nice. Very nice. So, strategy tester tab. Okay, so we have our strategy in place. We have entry signals and exit signals, but we're not getting the best results. So let's add in the take profit logic here. And it says we can either use a static HMA or use an RSI. And the RSI, I want to use that. So we're going to use when it goes underneath the overbought threshold. When it crosses under that, we're going to exit, and the opposite for when we're short. To do that, well, we can do this with the strategy close function. And it's pretty simple. So strategy close, and we need an ID for the position that we're closing. So strategy close, closing that position, and when? Well, when the RSI, and you know, I'm computing this RSI 1, 2, 3 times already, and I'll probably do it 4 times. So let me just take this out and put it here. That way I can just replace that in the way again, copy this, drop it in there, and replace with RSI. Okay, RSI equals RSI. Now we have that when RSI, and we want when there's a crossover, cross under. So when cross under, the RSI crosses under 70, which is goodbye RSI. Let's add this to the chart again. So this is our normal threshold right here. The upper band right here, 70. So when it crosses underneath that, it's got to go above 70, and then it's going to come back down and go below 70, cross under. So when that happens, we want to close our position. We want to take a profit for the long. And we'll do the same thing for short, but we'll do the 30, and we want to cross over that, because now we're going to go under it, and then we got to come up. We're going to go under 30 and then come up and go over 30 with the RSI. So close the go short position. Now let's see if that improves our strategy a bit. So what do we got here? We have a entry for go long. We're above 50. We're above the green. And then here we have a entry order to close. So here we're getting the cross under signal, because if you look closely, that is 70.05. So we're above it, and then here we are crossing under, and because it's a close, strategy.close, it's a market order, so it will be executed on the next bar, and here it is right here. So that's working. Let's go find a short signal and make sure the short's working. Go short, and strategy entry close short. So same thing, we are below 30 at 18.12, and on the next bar we are above 30 at 35. So we've crossed over, and then on the next bar that order is executed and we are closing. Good. Now the tester tab looks a little bit better now, but when we save that and reset that, we lost our settings that we put in here, our properties, when we put in commission and slippage, and we changed our order size. So we can do that again, fix that up, or we could put it in to our code. In the strategy code, you can put that all in here. So now that we fixed that, let's see. It's loading. Let's see what happens here. Maybe pyramiding will help. Not really. We got a lot more trades, but we're still losing a lot of money. We're bleeding out. So we've added in a take profit here according to the strategy. Go long. You close order right after. Oh, if we stayed in, we would have made more money.